Here's a shocking stat. 80 to 90% of day traders lose money, and many of them are reacting to what they hear on stock market news. That's not just a mistake, that's a pattern. So here's the real question. Is stock market news helping you or hurting you? Let's break down why ignoring stock market news could actually make you a better investor. Welcome back to Simply Money. Everywhere you turn, TV, YouTube, financial websites, you're bombarded with market updates. Dow drops 500 points. Tech stocks rebound. Bitcoin crashes again. It feels important. It feels urgent. But here's the truth. Stock market news is often misleading, emotional, and dangerous if you act on it. Let's talk about how this noise can sabotage your wealth and what to do instead. The real challenge is this. News isn't designed to inform you. It's designed to engage you. Think about it. Media outlets like CNBC, Fox Business, and Bloomberg run 24/7. They have to fill time. That means they often amplify minor stories or short-term fluctuations that don't matter to long-term investors. For example, take the 2016 Brexit vote. Markets plunged nearly 8% in 2 days after the announcement. Panic spread. Headlines screamed recession. But what happened next? Markets fully recovered within 2 weeks. Long-term investors who stayed the course came out fine. Those who sold, they locked in their losses. The challenge isn't that the news lies, it's that it's incomplete and emotionally charged. It triggers fear, greed, and urgency, the three worst emotions to mix with money. Why is it like this? Because media runs on attention, and attention loves drama. When markets go up slowly over months, there's no story. But when they drop 3% in a day, that's headlines. Take this example. In March 2020, the COVID crash caused the S&P 500 to fall over 30% in a month. News outlets were calling it the next Great Depression. But by August 2020, the S&P had recovered everything it lost. Investors who ignored the noise and stuck to their plan, they earned their return, and they were just fine. Those who bailed out because of news panic, they missed the bounce and locked in their losses. Even Warren Buffett warns about this. He once said, "The stock market is a device for transferring money from the impatient to the patient." So here's the insight you've been waiting for. It's not about chasing headlines. It's about consistent, long-term action. If you had invested $10,000 in the S&P 500 in 1980 and just left it alone, no trading, no reacting, you'd have over $1 million today. But if you missed just the 10 best days in the market because you were on the sidelines waiting for the news to calm down, your return would be cut in half. 10 days of the best bounces because you were on the sideline panicked. That's the cost of reacting to noise. So here's what to do instead. Build a diversified portfolio. This helps spread out your money, your investments in different companies, different sectors, and can help minimize downturns. You're still going to have downturns, but it spreads it out and can help balance it. Stick to a long-term plan. Investing isn't short-term. News cycles are short-term. If you're investing for long-term, even a year is short-term. So don't get distracted by short-term news. And that's the third point. Tune out the daily drama. Investing is a marathon, not a sprint. And the media is shouting from the sidelines, trying to distract you. So the next time you hear stocks crash as Fed speaks, or Bitcoin surges after so-and-so tweets, ask yourself, does this change your long-term plan? If not, ignore it. As of the making of this video, the United States and China just came up with a 90-day trade agreement. They're going to reduce the tariffs for 90 days. It has caused the S&P 500, the Dow, and the NASDAQ all to bounce 2.5% to 3.5% off of that news. Just 2 days before, everything was going down and everybody was calling for a recession. Again, we don't know when downturns are going to happen. We don't know when recessions are going to happen. We know they will happen, but they always bounce back. Is this a bounce back or just another temporary upswing, and then it's going to downturn again. We don't know, but that's the noise, and you're going to hear all about this right now. It's big news because it's bouncing it high, so people are getting greedy and trying to buy. In fact, when it was going down would have been the better time to buy. Who knows what will happen tomorrow or next week or next year, but long term, your investments will go up. Silence the noise, stick with your strategy. What's your take? Have you ever made a financial move because of news headline and later regretted it? Share your story in the comments. I read every one of them, and I'll do my best to respond. I appreciate you watching this video, and I hope this encourages you. If you like this video, hit that like and subscribe button. Don't forget to hit the bell so you're notified of future videos, and we'll see you next time on Simply Money.